Before we get started, I want to remind everyone that the information in this presentation is not to be or construed as investment advice. The information presented are subject to change without notice, and while we have made every reasonable effort to ensure that the content is reliable and accurate, we have not independently verified the content and are not responsible for errors therein. Please consult a professional advisor before putting a loonie in any of these financial markets.
Hi everyone, my name is Richard Diaz and welcome back to the IceCap Canadian Market Wrap. In this week's episode, we are going to briefly touch on September's employment data from the Labor Force Survey. There were some positive signs and we will highlight those, but there is also reason to be skeptical of the monthly improvement and why it hints at what's rotten at the core of the Canadian economy. So let's get to it. Canadian employment increased by 60,400 in September. This increase partially offset a cumulative decline of the 106,000 over the last 2 months, but big picture, employment growth has flatlined. From January to September, employment has recorded a little net growth of about 22,000, and as you can see from this picture, it's still below the June peak. The unemployment rate was unchanged at 7.1%, but this, of course, hides the continued deterioration in youth unemployment, which rose to 14.7%, the highest rate since September of 2010, excluding COVID, of course. Note the different scales. I do this to show that frictional unemployment is higher for young people than it is for old, and to highlight that the decoupling that we're seeing right now is unprecedented. This is because the government flooded the labor market with young people, something that we have discussed at length before. But this government doesn't care about young people, so let's move on to their voter base. The unemployment rate for people aged 55 and older rose 0.2 percentage points to 5.5% in September, coinciding with the decline in unemployment in that group. Prime age unemployment is stuck at around 6.0%. As regular viewers will know, the headline figures tend to hide what's going on underneath. So here's another picture, and it's not a pretty one. The unemployment rate in southern Ontario and the biggest cities in Alberta were well above the national average. And we expect this trend to continue as unemployment continues to rise. So what are the positives from September's release? Manufacturing. With 27.8 thousand new jobs added, it was by far the most of any sector, and it was the first such increase since January. In healthcare and social assistance, employment increased by 14,000 in September, following little change in August. Over a year-on-year basis, employment in healthcare and social assistance was up 53,000 or 1.8%. And we'll get into why that's an issue in a minute. The increase in manufacturing employment, which you see in blue in this chart, corroborates the improvement we saw in the manufacturing sentiment from the CFIB Business Barometer, which is a small business survey, where manufacturing had the biggest positive jump of any sector. It also suggests that we might have seen the bottom in exports ex-energy product, although there are two important caveats. One, correlations should not be taken for granted. They can and do change, and as you can see, there is quite a lot of volatility in these two series. And two, headlines out of the auto sector may confirm my suspicion that without a comprehensive trade deal, more jobs may yet be lost in this sector. If you're wondering why I removed energy from total exports, it's because oil exports via pipeline are much different than normal manufacturing, i.e. putting things together in a warehouse. And price fluctuations screw with the numbers because oil is such a big chunk of Canada's exports. So now, switching gears, why does September's labor force data hint at what's rotten at the core of the Canadian economy? Well, you guessed it. Public sector was the lion's share of the gains in employment. That's the red bar, and as you can see, it's slightly more than half of the total employment gain for the month. This is not healthy, but unfortunately, it's just the continuation of an ongoing trend. Since January of 2019, a whopping 42% of all jobs were derived from the public sector. This is nuts and not at all sustainable. Canada needs private sector employment to pay for all those public sector employees, or else the economy just eats itself. Now, of course, no one is suggesting that public sector employment is not important. The public sector is critical to providing essential services, infrastructure, and regulations that support society's well-being writ large. And it enables the private sector and citizens to thrive. No one is disputing this. But in Canada, we have obviously gone way too far. It is now at a 30-year high ex-COVID, and at the same time as this high in public sector employment, public sector productivity continues to languish. It would be funny if it wasn't so sad. And this is because the government seems to not have learned a thing. Canada is facing a productivity emergency, as we've discussed at length on this channel, and we will continue until things change. Productivity growth, as you've heard me say, is the only sustainable way to derive economic growth and to improve the standard of living of working people. To improve on this horrible productivity growth, Canada needs private capital investment and the private sector jobs that come with it, not ever more government intervention. Canada needs to embrace deregulation, lower taxes, and a regulatory environment that encourage foreign and domestic private sector investment. Yet, sadly, we seem to have learned nothing. And in a couple of weeks, Canadians are about to be hit with a big, beautiful budget deficit, the likes of which we have never seen. My hope is that there will be a wholesale change in philosophy in the role of government in Canada, but of course I expect to be disappointed. As demonstrated in this and many of my other videos, the government's economic footprint is the largest it's been in a generation, and there is little to show for it but pain. There's more inequality, worse growth, higher debt, less investment, and an economy who's more vulnerable to external shocks. The philosophy of ever more government intervention is bankrupt, and it's time for a change. All right, that's a wrap on this week's episode. Please like, subscribe, and follow for more. And as always, we manage money for families all across Canada and the world, so please feel free to get in touch.